Yo, what's up, guys? Yeah. So, so I'll be waiting for your questions in regards to what's happening currently. Um, this is the Asian range model, you know. So I'm just waiting for people to jump in so I can be able to explain it to you guys. Can you guys hear me now? Can you hear me? All right. So basically, what we're looking for is strictly straightforward. I'm just gonna show you with previous sessions. This was on Friday. So basically, what you already this model is straightforward. I've mentioned a couple of times that in terms of what to look for, we always gunning for what the market is doing at the moment, right? So this is in line with having to create your own trading plan, right? Having to create your own trading plan. So, and I always say your trading plan involves these three things, right? Firstly, you need a model, right? You need a model. The model can be either be ICC, it can be ICT, ICT can be SMC, it can be SMT, or whatever the case may be, right? Number two, you need the entry criteria, right? You need an entry criteria. And entry criteria relies mostly in things of it might be a market structure shift, it might be fair value gaps, it might be order blocks, order blocks, it might be continuation, right? So all of these kind of things they kind of play a role, you know, they all play a role in terms of what you're gunning for, right? And then number three, what you're aiming for is basically your risk to reward, right? So all of these things they make a trading plan, right? So all of these things they make a trading plan. So in regards to what is currently happening at the moment, is that what we usually want to look for is that in the Asian range, you want to see a sweep of liquidity, right? So this is part of the entry criteria. So this is straightforward in terms of what is going to be happening. So I'm going to be showing you what is going to be happening, right? So with that being said, currently what we're going to be looking for is that we see already we have a market structure, we have a liquidity sweep to the downside of the Asian range. We had the liquidity to the downside of the Asian range. Price broke to the downside. So what do you want to see? You want to see price give us a market structure shift, and as you can see, price been making lower lows and lower highs, lower lows, lower highs, lower low, lower high, lower low, market structure shift. You get what I'm saying? So you want to see this candle close above this market structure shift and probably look to go to the downside. You get what I'm saying? So looking to the go to the downside, and then as you can see over here, we already had a changing state of delivery. Price looking to go to the upside, right? But we want to see price come back to this area over here, right? So what price having to come back to this area over here, what we're gonna be doing is that we're gonna pull our box, our square box, something like this, and then the 50% of that box it will be our entry point. So if you don't know how to switch it on, you can switch it on like this on settings, your box, and then your square, and then this is would be how the trade will go. Stop loss would be just below. our stop loss will just be below the highs, the lows actually, and then our risk to reward will be 1:2. You get what I'm saying? So similar thing based on the session on what we know we were talking about. Similar thing happened on Friday, right? We saw price give us that sweep of liquidity to the upside. So if this is for people who are actually looking for some sort of a clear trade, a clear model which can help with your trading. So currently we do have that market structure shift to the upside. I mean, we did have, this liquidity sweep to the upside. As you can see, price making higher highs and higher lows, high, low. With that being said, as you can see, we did have price also give us that market structure shift. You get what I'm saying? We had price give us that market structure shift, which ended up happening at this area. And as you can see, we could have easily taken this from this high to this low over here. And then obviously with price coming back, closing above, and then obviously this would have been our entry, stop loss just above this over here, and then obviously looking to make a 1:2. Price can go all the way down, but you want to have a straight setup. You get what I'm saying? So with that being said, you already have number one, the model, number two, entry criteria. I'll just say easy. And then number three, risk reward in terms of your what you're gonna be looking for for an entry. 1:2R, right? So this is a complete trading plan, you know. This is a complete trading plan and a trading strategy in terms of what to look for. You get what I'm saying? So similar thing in terms of what's currently been happening over here. So now, as long as we haven't really shown sign of coming back to the downside, we're just gonna keep on, letting this trade do what it needs to do, and all of these things should be happening on the 5-minute time frame. You get what I'm saying? So this model you can back test it. You will need this indicator, by the way, by the Asian range by Nico. You will need this. This is not to confuse you. This is just to help you have a steady, and no, this is not ICC, right? This is purely market structure, right? But you just need some, price to mark off the Asian range. You just need price to mark off that Asian range. You get what I'm saying? So with all that being said, this makes things much easier for you to have a steady model that you can always make something of early in the morning. You get what I'm saying? So already we passed London Open. So from what is currently happening now, we can expect price to kind of come back to this area, give us that, once price starts to give us those, candlesticks to the downside, move to the downside, to come back to the downside, you're going to take the high end, then you can take the low and the high that ended up giving us that market structure shift. In this instance, we do have the market structure shift, printed out already, right? So we're just waiting for price to kind of reverse so we can know which high we're gonna be using. You get what I'm saying? We're gonna be using, right? And then the time interval between when to look for opportunities is 4 hours from this close. Once this Asian range stops printing out, it is 4 hours from there on. You get what I'm saying? So yeah, in terms of ICC, I'll show you some ICC analysis soon. I can set up another. Let me just re reactivate this. Yeah. So I've set up this again for price when it comes back, so we can look back into it. You get what I'm saying? So this is for Asian range. Remember, these align with the three things: model, entry criteria, risk to reward. You get what I'm saying? So pretty much we already had the sweep to the downside of the Asian range, and then we're looking for price to continue going up, but we're only gonna be aiming for a 1:2 risk to reward. You get what I'm saying? So with that being said, we can now move to um, the likes of NAS, ICC. This only, by the way, that only works on Euro USD. It can work on other, currency pairs also, but Euro USD most of the time. You get what I'm saying? So, with that being said, let's move on to the ICC analysis that we do have, right? So, I did always speak about, understanding a range, right? So, understanding a range is very important because whenever price prints out, a range, it will always look something like this. So understanding where you are in terms of the where the market is going, it is very important. You get what I'm saying? So we have a high, we have a low. Price gave us an indication to the upside, right? Price gave us an indication on the upside. This can be probably be happening on a higher time frame, like the 4 hours, in most cases. So you see structure like this, printing out, and you thinking, oh, but we are bullish. Yes, we are bullish. Price is giving an indication from this high over here to the upside. All of this movement is an indication. Price comes back, creates a higher low, right, at this area, and this looks like a break from this area over here. Right? And now people would think we are bearish. We are not bearish. We're still bullish because the higher low is here because price broke from this highs, made a higher low over this area over here. You get what I'm saying? So you have a higher low at this area, and you also have another higher low at this area. You get what I'm saying? So whenever price goes back to this upside, this is still valid, right? Even if prices to come back and correct back, as long as it doesn't break this previous one, it is still valid. You get what I'm saying? Price can still move to the upside. You get what I'm saying? And we've seen most of this happen recently, mostly on gold. Gold printing out most of these things. You get what I'm saying? So you don't end up getting caught on the wrong side of the market, right? So we have this higher over here that we're looking to see price go and take out. You get what I'm saying? So the range is gonna be between this previous high and this higher low, and then giving the indication this higher high needs a higher low. As long as it doesn't break this higher low, this previous higher low, it needs a higher low. Still price can, even if after price comes to the downside again and it still doesn't break this is still considered a higher low in that time frame where price gave us an indication, which is the higher time frame. It can be the 4 hours. Get what I'm saying? So price can then still push to the upside, and still, even if you trade in the side entry model, you can still put your entry from here because the first one you would have probably got taken out, and this doesn't mean price is now bearish because you'll be like, oh, but I think price gave us an indication to the downside. That means I should have sold from this level over here. No, that's not the case. You get what I'm saying? So now you always end up getting caught because that's what most people end up thinking because now you bought and then price came to the downside and it took you out. You're like, oh, but this is an indication. Let me just try to sell to the downside, right? But that's not the case. Price is still very much bullish by doing so. You get what I'm saying? Price is still very much bullish, and this is what you can usually aim for. You get what I'm saying? This is how a range is identified. Until we break the previous high lows, we will remain bullish, right? So I like to use the 4 hour for all of these analysis to get a maximum range out of these trades, right? So previously on Nasdaq, as you can see on Nasdaq, we did have price eventually break the lower highs on the 4 hour. Price broke the lower highs over here, right? And price gave us indication, came back to give us this higher low, right? And then price kind of played around, you could have used this one still fine, but still at the end of the day, price broke above, gave us this in that indication to the upside over here, right? And then this indication was supposed to create the higher low and continue to go to the upside. But instead, price came back to obviously break also below these previous higher lows that you see also over here. You get what I'm saying? Right? So even if you took these ones over here, it's still not a problem. Me, I decided to go with this one because this was the recent one that actually went to the upside. But still, even if you choose this one over here, because price ended up breaking both of them and going to the downside. So obviously, with the range being complete, the range is only complete when price decides to actually break from the range. You get what I'm saying? So that would mean price broke from the range, going to the upside, creating a new range. And then this was supposed to be a correction, price going to the upside, but price didn't do that. Instead, price broke to the downside. So now this indication is no longer valid, but only, this is valid to the downside. Whether you could have used this one or this one is still fine because price broke both of them, right? So now because I used that one, I'm gonna delete this one and then price to the downside. As you can see, we saw price break to the downside, and as you can see, this is the current trade. You get what I'm saying? So you can eventually aim for the next swing point if that's what you wanna go for. Like size says, the next swing point would be this at the bottom, and as you can see, price is definitely going to the downside. You get what I'm saying? So all of these things, they play a role in terms of your trading. They play a role, right? So price give indication, went up correct, and then sold the first time, still went up, and then went to the downside. We are still bearish because price has room to correct between this higher low and this higher high where price had broken below. So price has room to correct into this. Even if price would have went to, exactly this area, we were not bullish. We were bearish because price had broken below. So price would have easily went to the downside, right? So this is what's currently happening to the downside. So in terms of also opportunities on the lower time frame, we can clearly see that on the 15-minute and the 1 hour, we saw price kind of after making that, price onto the upside, broke below. So I spoke about for additional entries, you can take this as part of the indication on the 15 minutes. Remember, you can still find indications on the 4 hour, the 1 hour, and the 15 minutes. So you can still take this as an indication to the downside, and obviously price looking to probably go back to this area, price probably going back to correct from here, and then anything probably below this area would then be, looking to take to the downside. So you can also take that with the side entry or whatever entry you would be preferably, something that you would want to do. Whether you're going to be taking this, the one that precise says, and then obviously aiming for this area over here, or this the market structure correlation entry, which should be price making lower lows and lower highs to the downside, and then obviously taking price to the downside, probably on a 1:3 or up until this area over here. And then obviously, like I say, always say this is relative for 1:3, the market structure correlation entry, which is the Hassel University entry, for me to, something that I use. So indication on the 15, then you will use the 5 minute for this entry over here, or even the 1 minute. But advisably so, the 5 minute would be something that you can use, or you can just have an sell open, sell limit waiting here, and then obviously have your stop loss just above these highs over here, or even these ones over here in terms of where the indication came from. You get what I'm saying? So the lower highs over here that led to this indication, the 15 minute, and looking to make a 1:1, of that trade. So this is how the trade would eventually look like. You get what I'm saying? Right. So with that being said, we can then be able to, go back to check on our Euro USD trade. So as you can see, the Euro USD trade that we are on, price is still moving to the upside, but it will definitely come back to the downside to just give us that, to the downside. So as long as there's still, candlesticks going to the upside, we're still gonna be waiting for that, push to the downside, just to, push to the downside. And obviously, let's say price decides to drop from here. Obviously, you're gonna take your 50% will be at exactly wherever your 50% will be, then you can take to the upside. You get what I'm saying? Based off the Asian range. And then obviously, like I said, like I did show you, we did have that sweep, liquidity sweep. Same thing applied over here. Risk, model, entry criteria, risk to reward. 1:2 risk to reward, always the case. Trading plan involves model, entry criteria, risk to reward. You get what I'm saying? The maximum in terms of risk to reward, I always say, is or the maximum will always be the 1:3. And you also have the 1:3 R, and you also have the 1:2 R, and then you also have the 1:1 R. Right? Most people, they don't think this one is profitable, but bro, I can tell you now, this is very profitable. 1:1 is very profitable, unlike any other strategy. Because if you flip your account 5 times using this 1:1, you looking to make 1:32 after 5 flips. You're flipping your account, but this is advisably used on personal accounts. You get what I'm saying? So this is for pro firms 1:2 and 1:3 for pro firms, but the most regular one, it will be a 1:2. You get what I'm saying? So with that being said, yeah, let me just yeah. So with that being said, we obviously looking to also take price to the upside. As you can see, now price is looking to drop down. You see, now if you can have this candle close to the downside, even if after this candle close to the downside and price goes to the upside, we're still gonna be using this high, because this is where price ended up making a market shift and then decided to drop below, and then even if it goes up, we're still gonna be using this. And remember, the trading period will be the 4 hour between the close and then obviously where price gonna. So my 4 hour period is gonna be up until this 12 noon. So currently is 11:21. So let's see what price does. So if price then continues to close below, I'll be waiting for price exactly at this 50% equilibrium. You can either use the box or you can use the Fibonacci, 50% thing. You know what I'm saying? So you can use the 50%, which should be exactly at the very same point. As you can see, we have the 50% at the very same area. So obviously 1:2 would be exactly somewhere around this area over here. You know what I'm saying? So let's see what price does, in terms of coming back to this area to give us that correction and continue to down to the downside, right? So we're just gonna be moving on to the likes of gold, and then we're gonna switch off these, and then obviously starting off with the 4 hour. Right. So what gold, what I suspect is gonna happen on gold is that, right? We had price give us an indication from this range to the upside. Price came back correct, gave us a high low. On a lower time frame, the likes of 1 hour, we started to see gold. Can you tell equal low equal? Huh? Can you tell equal low equal high how to trade? It all depends on. It honestly just depends on the range that you are in, right? Like for instance, price went up, give us indication, came back to correct, right? We started to see price give us these high highs and high lows on the hour time frame, high low, high low, high low, and then we have a new indication to the upside. So I suspect that price would definitely, might not correct this area based on what's happening all over the world, and then obviously price might just continue give us an indication and even give us that new indication above this area and go back to this area over here. So we might only see the correction of price once price comes back to correct this high, and price might also be correct in this area only for price to continue to go to the upside. Same thing happened when price gave us that indication to the upside on the 4 hour. We saw price give us these highs over here where price didn't correct. Even when it looked like it was correct because it rejected this area, price didn't correct that area. And as you can see, we ended up having equal highs because price had corrected this, internal range within the 4 hour range, above these equal highs that we did have previously. But because of the range, like I said, because of the range that was happening, because price had previously broken above this 4 hour give us indication, came back and corrected this area over here, and then the range also, the higher low was below over here, right? And then as you can see, price ended up making this equal, highs, but these equal highs were still within the range of what was happening overall. You get what I'm saying? So let me, all right. So all these equal highs was still happening within the range of this high and this high, this, you know, this previous range also in this high. So price still was still looking to go to the upside because we still had price give us that indication to the upside. So even with the equal highs, it was still not a problem until price broke above, came back to correct, and then went to the upside without giving us that correction that we needed from these internal highs until price gave us the new indicator correction, came back to correct this range, and then went back up to the upside. And on the 1 hour, like I said, we started to see price move up, making high highs and high lows. You get what I'm saying? So now we might be looking to see price eventually push up all the way up, and then only to come back and correct, and then push, continue to go to the upside. You get what I'm saying? So these are some of the things that we can be waiting on Nasdaq as far as we know it. You get what I'm saying? So moving on from Nasdaq to, I mean, from gold to the German 30. So with the German 30, we do have something interesting happening on German 30 also, right? So I'm just gonna take this one, right? So we did have price give us a new indication above these size over here. Honestly, we saw price give us that indication. Let me see over here what was happening here. There was an indication also. What's happening? Okay, how did this thing get here? All right. Either way, so we saw price give us an indication above this 4 hour highs over here to the upside, gave us this high, came back to correct, same thing, made it a first high low, went up, and then came back to make a second high, but still within this range. It didn't break the high lows, so we still expect the price to push to the upside. We saw price open to the downside. We are still very much bullish. We might be bearish on the 1 hour based on how price has been reacting, because we saw price make this higher high, came back to create the higher low, and then went out to create a new higher high. So price might have broken below. We might be bearish on the 1 hour, but overall we are still bullish based on the 4 hour. So should price continue to go to the upside, we still can be looking to take those buys to the upside. You get what I'm saying? So understanding that is very important so you don't get up at the wrong end of the market. So let's see. Okay, now we're having on the Asian, back to the Asian range, we're still having price coming nicely to the downside, to coming to correct. Like I said, those who are not familiar with the Asian range model, I'm just gonna give you a quick breakdown. Let me just drop down the font. All right. So basically, what we're always gonna be looking for in terms of having a trading plan, I always cannot, like, I always stress this because most people they just trade with the hopes of making something of the trade. You get what I'm saying? So, no, I'm not only gonna be streaming here because we do have a Discord. We have the free Discord, and we do have the Hasi University Discord. If you want to be part of the mentorship programs, where I'll be teaching some of these stuffs and all of these. So I'm just giving you guys the free source here in terms of this Asian range. It can be something that you guys can put into your arsenal, and something that is very consistent, and you can only find it on Euro USD. In terms of trading it, it does happen on other pairs like New Zealand dollar against the dollar, yeah, but is more consistent on Euro USD. You get what I'm saying? So, like I say, trading plan is very important. You don't want to be trading for the sake of trading. Oh yeah, bro. So you don't want to be trading for the sake of trading. Whatever model you choose to go with, ICC, ICT, SMC, SMT, or price action only, market structure doesn't really matter, right? Entry criteria will then depend on the model that you chose, right? Some might be, liquidity sweeps, fair value gaps, order blocks, continuation on ICC, whatever the case may be. And then the risk to reward, the maximum you want to go for is 1:3R. That's that one I cannot stress enough. Like, don't go for unrealistic risk to reward. People end up getting caught in most of the cases because you want to take $10 to $100 in a single trade, which is not impossible, but at the very same time, it's not realistic. You need to be realistic in terms of everything that you are doing, and it need to make sense. It need to make sense. You get what I'm saying? So, and you need a process, because like in the words of David, one of the greatest traders I know, David Paul, he said, you need to build a system because the mind gets bored easily. You get what I'm saying? You need a system that you can adhere to. And the only difficult part about trading is you having to do the same thing over and over and over again without your mind getting bored or your mind telling you otherwise. You get what I'm saying? So those are some of the things that you need to really put into perspective whenever you come into trading, because trading is a really boring game. To be profitable, you need to get bored. You get what I'm saying? So, but you need to stick to the plan. You get what I'm saying? So, with that being said, the Asian range model is very simple, right? The Asian range, there you have it. That's the model, right? The entry criteria, you want to see a sweep of liquidity either to the upside or below that, range. You get what I'm saying? You are, in terms of the entry criteria, still you want to see price give you a shift in market structure. The time frame that you're gonna be using is gonna be 5 minutes. A sweep in market structure through the downside, and then from the sweep of market structure, once price starts to indicate that it's going back, into that area, you wanna put down your box. 50% of that area will be your entry point. Or you can use your Fibonacci, whatever you wanna use, and then 50% of your Fibonacci will be your entry point, or equilibrium would be your entry point, and your risk to reward would be 1:3. You will have losses in some instances, yes, but in most cases, chances are you will be profitable. And in terms of the overall, look in terms of how things are looking, you want to be able to see price eventually kind of, what is this? Um, oh man, I lost my train of thought. But overall, you wanna, be consistent enough to have a process that actually give you money at the end of the day. You know what I'm saying? Like for instance, we did have a break. We have a sweep of liquidity to the downside over here, right? Price made a shift to liquidity. And then in terms of the range, watch this 5 minute range. This is how far range goes. Like I always say, price will always print market structure, no matter the time frame, right? So price may end up making lower low, made a high, made a lower low. So the range, the low that was supposed to be broken was this one, right? We didn't see price broke this one, so someone would have easily got taken out because they saw this one taken out, but this was still part of the range because we didn't see it break below this area. You get what I'm saying? So we ran out of time before price actually did that. So this was no trade for me. You get what I'm saying? So and then we had this one beautiful trade. We had a sweep to the high over here, while price making high highs and high lows, as you can see. And we had price give us a market style shift, or some can say change the state of deliver or change of character, whatever you guys call it. So price end up printing this lower low over here, and then obviously with price going back to the upside, we could easily, have our equilibrium at there, and then obviously 1:2 risk to reward, 2R, consistent, very, very consistent. You get what I'm saying? Very, very, very consistent. This one also was past the 4 hour period, so we didn't have any break, so no trade. There was a one which was a loss. Also, this one we did have a sweep of liquidity, lower low, lower high, lower low, lower high, lower. Yeah, this was also past the 4 hour period. Still no trade. So this can be one of the models that you can eventually implement. We have a sweep. We didn't have in the master shift only happened at the top over there, right? You saw master shift happening there at the top. So even if you would have pulled price, I don't think price would have came. Even if price, yeah, price didn't would have came, and then the 4 hour period also expired. So no trade. There was a one which was ended up being a loss eventually. I don't know if I think it's this one. Right. Yeah, this was one. All right. So we had a market shift also from this area over here. Price end up giving us a market shift, higher, 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 low, higher, high. Make a liquidity sweep and then a market shift at this area. Obviously, in terms of 1:2, I mean the equilibrium also, we would have had the equilibrium at this area, and then our entry would have looked somewhat like this. Stop loss just above the highs, and then obviously looking to make a 1:2. So this one ended up being in a loss. But the stats compared to losses and wins, they're very, very differ because your wins are more than your losses. You get what I'm saying? So price making lower lows and lower highs, lower low, lower high. Price goes to the upside, breaks the lower high, comes back to this area, right? Market start shift. As you can see, 50% between the low and the high that end up making market start shift. Entry, stop loss below the lows, 1:2, still within the, you know, still within the 4-hour period, and you can hold your trade afterwards. It's not a problem. You can hold your trade afterward. So back to what is currently happening. So we had price make a high, and then it sold to the downside. So this gave us a shift in also, change in state of delivery. So we're gonna use this. Even if prices to go up, we're still gonna use this, and our entry is gonna be here. So we definitely about 25 minutes away from this method expiring, right? So all of these things will then apply in terms of, but if this 12 noon, 25 minutes away, if 12 noon on my side hits, then without getting an entry, this will be a no trade for me. So this is one of the models that you can add to your arsenal, and then obviously something that you can do early in the morning, straightforward, straight to the point. And if you decide to even stick with this, backtest this, guys. If you decide to stick with this, it will be something that you can actually make money off. You get what I'm saying? And understand risk reward. Please understand risk reward and lots position sizing, because these things are very important also, right? And 1:2 doesn't necessarily mean risk 1% of your account, right? You can be having $100,000 or $10,000 pro forma account. You can be risking like 2.5% every single trade, because now you're looking to make, if you're risking 2.5%, which is with like $250 on a $10,000 account and 2,500 USD on a $10,000 account, you're looking to make a good $5,000 or $500 on a single trade. And if that is how you're gonna be getting this position, this is very straightforward. It's not it's stress free. You just wanna have a market start shift, everything happening on the 5 minute. After the close, you wanna see a sweep of liquidity either to the upside or the downside, market start shift, and then obviously 50% of the equilibrium between the high or the between the market start shift and the high that end up being on the upside, and then obviously having that to take price to the downside on a 1:2. You can risk whatever amount you want to risk on your account, and then you pass your pro forma account. As easy as that. That process is straightforward, straight to the point. We want to build millionaires this year, brothers. You want to build people who are very consistent in terms of trading. So currently, this was happening on the market now. We saw the liquidity sweep to the downside. Price been making lower lows and lower highs. We always want to use the one that's been retested, obviously. And then as you can see, market started shift to the upside after this lower low, market started shift, and then price went up to create this high. So even if price continues to go to the upside from this area, I'm still gonna be looking to use this from here. This here and this here over here. This is what I've realized, that you don't need to go for the one up. You just want to use this one, obviously, because price has sold at this area, right? We saw a pause to the downside, or just price going to the downside just a little bit. If but I'm still gonna be keeping this over here. You get what I'm saying? Even if price continue to go to the upside, so you're still gonna be keeping this one over here. You get what I'm saying? So this is what we're looking to see. If it hits, we're then gonna be taking this trade. If not, yeah. Most definitely, bro. Most definitely. Most definitely. Most definitely. That's why always you're in the Hassan University. You know how I always worry about trading for the sake of trading with the hopes of making something. You need a clear plan. You need a clear plan. You get what I'm saying? So you need all of these things over here. Trading plan, very straight to the point. Model ICC, enter criteria, continuation, risk reward will then be applied based on the three entry criteria we do have in the Hasig University. And you know that, and I'm very proud on how far you've come. For those that don't know who you are, I'm just gonna show them how far you've came, right? I'm just gonna show them how far you've came in terms of everything that's been happening, right? Um, let me show you. Let me show them. Huber. I'm just gonna show them how far you've came. This is how far Uber has came, right? Um, since you joined the Hasu University last year when we started, and then obviously we've been having those ones to ones, and then obviously I've been showing you, we've been big testing all those kind of things, all those kind of things in terms of positions and all that. You told me, you blew your account the other time. Remember, you had a self stop open overnight and you forgot to close it. Um, yeah, we've been having those one-on-ones, and we've been working on the trading plan, all those kind of things. And then obviously this sometime this year, you did, I think last month, you did tell me you finally made it. It finally clicked for you. You get what I'm saying? It finally clicked for you, and you killing, bro. Like, and you were able to master the 1 minute eventually. Like I always say, price will always give you a proper price will always print market structure. You get what I'm saying? So this is how far you've came, and I'm really proud of you, bro. Like honestly, this is what you wanna see. We do have others, man. We do have people others who they some of them they are very quiet in terms of their trading and all of those kind of things. They're very quiet. We do have daily sessions on the Hasu University. You know, yeah, the guys are killing, man. The guys are killing. This is Huba again. As you can see, bro is making a killing, bro. Bro is making a killing. He's been able to understand all of those things. You get what I'm saying? So we do have ICC nodes in terms of the nodes, what to look for. We do have sessions that you see. This was today, live London session. I did speak about some of the things. And then obviously we do have also new live New York sessions and so on. Right. And then we have ICC mastery courses, sorry about that. This was the ranges, in depth in the ranges, and then we have trading 101 is to 1R. We have psychology and trading, all those kind of things, trading plan and all of those kind of things. We do cover those. And I've just introduced the Asian range, which is actually what I'm talking about. So if you want to join the Hasi University, hit me up. Join the free Discord and then hit me up. This is the um what is this? This is the Haas University. So lifetime mentorship, as you can see, there you have it. These are the things that you're gonna be expecting: one-on-one classes, all these kind of things, trading support and all. And I'm fully involved in everything that is happening. You get what I'm saying? But back to whatever that you wanna do. Um, Having a trading plan is very important, guys. It's very important. Trading is all about treating it as a business. That's what you want to do. You want to treat it as a business, and you want to fully get involved, grow personally as an individual. And I'm giving you free source, the Asian range. I'm not even gonna be, saying, oh, you're gonna learn this in my Discord. No, I'm already giving it here. So you don't need to worry if this is gonna be something that's gonna work out for you. The model, the entry criteria, the risk reward. So definitely the period between, I would say, 8 a.m. between South African time or Eastern time, 8 a.m. and until 12 noon. You get what I'm saying? So you need to find the entry would be there. If not, still not a problem, right? So back to our original setup. Currently, we had a sweep to the downside, market shift, change state of delivery, and then we're looking to see price kind of pull back to the downside, and then we can take price to the upside. We're definitely 15 minutes away from the period where we must find an entry in our closes, right? But even if it does that afterwards, still not a problem. You can just go to the charts, Euro USD. You can just go back to the charts and then look what price has done. You get what I'm saying? If not, but the period is just gonna be between the close of this Asian session. Remember, the indicator you're gonna need, Asian range by Nico. Don't change anything. Just use you know, use that. You get what I'm saying? So basically that's what you're gonna be looking for whenever price prints out all of those things. You get what I'm saying? So yeah, 15 minutes. to go. Probably let's see. Probably we can maybe see price come back to this area. Give us something and then probably push up to the upside. But we're gonna be using this course of price. Made a pullback from this area over here. You know what I'm saying? So yeah, let's see what price does, and then we can look to take price to the upside. You get what I'm saying, guys? So I think overall you can probably set up um, an alert around this area of the Makassar shift. You see price probably might pull back down. Maybe if you can get a hard push to the downside, you can have this entry and then look to take price to the upside on a 1:2 basis. And like I said, 1:2 can be anything. Can be 2% of your account, can be 4% of your account, depending on how you want to pass the profile. But this is the model that you can use, the Asian range, right? The range, entry criteria, risk to reward. And that's it. Straight to the point, simple. You get what I'm saying? So, yeah, it just depends on you, man. It just depends on you. Whatever you choose, straightforward. Straightforward, straight to the point, and then you get there. You get what I'm saying? So, we're 14 minutes out. So, let's see what price it definitely does afterwards. Um, yeah, let's see what price does. Does anybody has any question? Um, do we have any questions? Do we have any questions? Anybody with a question? If you have a question, you can type it in. You can type it in. And yeah, the video is gonna be saved on YouTube, so you don't have to worry. I tried to do a video last night actually, um, before the market opened in terms of my thoughts, but then the video was not recording. My stream didn't have sound, so yeah, still not a problem. So I was like, okay, let me just do it with live markets. Yeah, so those are just arriving. This is the model. When I have price give us a sweep, maximum shift, and then obviously 1:2 R, the equilibrium of 50% of the candlestick that ended up making the maximum shift, and the one that is pulling back. You get what I'm saying? So you're gonna have like a 50% at that area, and then we're going to take price on the opposite direction. You get what I'm saying? So this is something that is very consistent, um, and obviously it's not 100%, but I would say it is 80% accurate in terms of those entries and those kind of things. You see, 1:2 again. Um, this was no trade. This was no trade also. This was no trade also. Was it? Yeah, no trade. This was a loss. This was a win. And let me see. This was no trade. Yeah, the 4-hour pre-period expired. Um, this one over here actually ended up being a win. As you can see, we had that sweep also, liquidity sweep. The higher low, the previous higher low would be this, and then Manchester shift, lower low, right? So like I said earlier, we're gonna use, as long as there's a pullback, we're gonna use that Manchester shift that ended up having a pullback, right? So the equilibrium would have been between these candlesticks and this one at the top over there, right? And then obviously the equilibrium, stop losses above the highs, and then 1:2. Sometimes you might maybe need to give it maybe a grace period, but for me, I just prefer it either being a loss or a win. So I don't end up being in a trade way too long, right? So um, this one over here ended up being a win. Lower low, lower high, lower low, lower high, lower low, lower high. Oh, this one actually expired also. Yeah, this lower high over here. So this was actually was a win because we had a market shift at this area, this lower high, right? So what ended up happening is that price, because the candlestick that we started to see price reverse from was actually these ones over here. So as you can see, price started to reject from there, and then obviously even price continued to go to the upside. Price came back to the very same equilibrium area, stop loss below 1:2, and as you can see, voila, you can go and back test this. You can go and back test this, guys. 9 minutes left, so let's see. See, price is coming back hard. It's coming back very hard, man. If you wanna be involved, get involved. Um, so this is the model we have. Like I said, we're gonna be taking this number 3 entry criteria, number 2 the model, number 1. So all in all, these things, they go hand in hand, and this is what your mentors will tell you, that you need only 3 things. You need a model. It might be ICC, ICT, SMC, whatever the case. In this case, the model. In this case, the model is Asian range. Right. The model is Asian range. And then in terms of the entry criteria, we wanna get the following. Firstly, wanna see price give us a market size shift, and then obviously 50% EQ equilibrium as entry. You get what I'm saying? Oh, we wanna see, actually the first thing we wanna see would be a sweep. Uh, I want to say liquidity agent. Yeah, agent range sweep. Agent range sweep, either to the downside or to the upside. We had a sweep to the downside. Market shift on the 5 minute. Or let me just say time frame. Yeah, I'm just put this 5 minute time frame. Yeah. Entry criteria, let me just write it. Entry criteria. Right. Risk to reward 1:2. Trading plan involves having these 3. 1, 2, 3. Risk to reward 1:2. And then obviously the whole model, I will say this, the whole model, let me just say note. 4 hours. Let's say window period from agent. Yeah. So 4 hours. You have 4 hours window period from Asian range close. From this close, you have a 4 hour window period to get a trade. If price doesn't get into a trade by that time, like for now, we are 5 minutes away, we might not get into a trade. So it's fine. We'll get to see it another day. But Friday, we did have price give us that in simplicity. So you can see um, this high and this where price ended up making a market shift. Let me just show you. You see, market shift. Let me just send this to the back. Yeah, so we end up having that market shift. High, 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 low. The sweep of liquid, the sweep of the Asian range high, 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 low, higher, high, lower, low, and then price started to go back 50% of the market shift, and then obviously the high, 50% of that was the entry, stop loss just above the highs, 1:2 beauty. It can go for more, but I would highly suggest you don't do that. Maybe you can open maybe like two, of these kind of trades, and then probably maybe take partials or leave a run, or just maybe, yeah, leave a run for 1:3. But I would honestly, yeah, probably maybe if you are at entry after price maybe like goes into profit, you might just move stop loss to entry point, especially after maybe breaking this area over here. You might maybe leave to entry profit, But I would highly not suggest that you do that, honestly. Have a strict process, man. Have a strict process. Adhere to your own rules. Have a strict process, adhere to your own rules. And then as you can see, like I always say, this something that you guys might want to screenshot. This is something that you might want to screenshot. Um, this is something that you might want to screenshot in terms of what we're looking to get price to do, right? So we're 3 minutes away. Yeah, so this is what you wanted to see actually. So this is something that you wanna actually get involved into. So let me just screenshot this. Yeah, this is something that you might wanna get yourself into. Yeah, and those who wanna join the ASU University, man, you just let me know, mate. Just let me know. Um, yeah, pretty much. So yeah, 2 minutes away. So we might not get into an entry, man. Unfortunately, guys. But the 4 hour window period expires now at 12 noon. So 2 minutes away. So yeah, let's see. Let's see what price does eventually. Let's see what price does eventually. And don't forget to like and subscribe the video if you like this content so you don't end up missing any of the content that is gonna be coming. Don't forget to like and subscribe, guys. Share the video, save it, whatever the case may be. Practice it as as possible, many times as possible. Um, you get what I'm saying? So you just do what you need to do, man. 1 minute left. So any questions, man? Do you guys have any questions? It might be London, ICC related, whatever the case may be. Do you have any question? But even if the 4 hour period ends in the next 30 seconds, I don't usually condone you. If price does come, yeah, it might come. But Don't take it, man. It'd rather be a miss out than a loss. You get what I'm saying? Don't take it. But if you're willing to lose, yeah, you might take it after the 4 hour period closes, the 4 hour period, from the close to where you should find an entry, you should have a 4 hour period. So, whether you're gonna be choosing to take it or not, for me, I would highly suggest you don't. But if you prefer, like, you feel like, oh man, price might just come and probably retest this area and then get you into that entry and then go to the upside. I mean, bro, you're more than welcome to do that, but test it out first. Back test out. You get what I'm saying? Back test it, watch how the market behaves. And the pair that you can do that to is Euro USD. Only on Euro USD. You get what I'm saying? Only on Euro USD. So yeah, see what price does, and then there will be losses. I'm not gonna lie to you. There will be losses in some instances, but the highs, the wins are much, much greater than the losses. You get what I'm saying? So this can be good for pro forma accounts, especially $10,000, $50,000, $100,000 pro forma accounts. This would be a very good, model for you. Straightforward. Even the mechanical structure of it is straightforward. You get what I'm saying? So you don't end up being not sure about your entry, or is it no? You just want to see a market start shift from the price giving you a market start shift in the 5 minute, and then obviously where that market start shift in the candlesticks will stop and start reversing. You're gonna use that that area and the one that ended up leading to a market start shift, and have like a 50% from that area. So you can either use the box and then set it up, include the metal line. Sometimes it doesn't have metal line in most cases, but you can then just switch on the metal line. As you can see, it will print it out, and the 50% will be where you take your entry stop loss. In this case, below the lows over here, and our 1:2 will be exactly at this area. So whatever you choose, guys, whatever you choose, this is very, very, very straightforward trading plan, the model, the entry criteria, the risk reward. Straightforward. But if you want to go for a higher risk reward than this, man, I highly suggest you don't. Honestly, that would just be great, and you not being reasonable with yourself. So you can literally flip your account, into something great if you're using this model. Let's say you start with 1,000, and then 1:2, you already made 2K, so you can withdraw for the day if it hits your TP. Let's say Friday you did that, you would have already made 2K on Friday, right? And then today, rather have a miss out where price doesn't, or you don't force an entry, and then obviously you don't lose money. Then the following day, if price does hit, then you can make some profits. Like for instance, I'm gonna make some example over here where we saw price eventually, give us that thing, right? So I'm just gonna give you a series of things that happened. There was a time it went for a 5 day streak win. Um, this year, this previous month, it went for a 5 day streak win. Just before this loss over here, it went for a 5 day streak win, right? So this one over here, this was a no trade actually. It was the trade, yeah, the day. See, you see. Honest to two, man. Honest to two. Honest to two, man. Sweep to the downside, high, high, low, higher, higher price came, but I don't think it came for the reward actually. The 50%, no, it didn't come for the 50%, but it still went up. Still not a problem, not a trade, not a loss. Just wait for the following day. High, market share shift. Actually, here it needed some grace because it came and tapped and then went down. But this was way later because this trade would have got triggered, but if you were still holding it, let me see, it would have got triggered, yes. Market shift, and then from here to here, obviously Yeah, this one is the first one after the market started shift. It just started to reverse and then went up, triggered stop loss above, and if you held, it would have been a loss, but 1:2 would have been just about this area here, right? Yeah, but all in all, yeah, that's how you do it, man. High, this one swept, right? Market started shift, and as you can see, this was just after the 12, the 4 hour period. As you can see, it can still happen after the 4 hour period. I just don't feel comfortable, you know. But if you wanna do it, bro, you can do it for. You can give it maybe 5 hours on yourself. If you back test it and it actually aligns, you can do it. So there you have the 1:3. You know, 1:2 actually. You know, um, yeah. This one here, actually, this one I don't know, man. It would have probably been a loss. You know, as you can see, lower low from here, but this looked like price had broken below. It did actually, and then went up. So this would have been a loss also. But yeah, that's what we end up having. This one over here, we did have just a week of the liquidity. Yeah, just a week of the liquidity. Market share shift, lower low. So this would have also been a win. The sweep of the Asian range high, and as you can see, stop loss just above the highs. 1:2. You see why I always say 1:2. 1:2. Not anything more than that. But if you want to leave a runner, that's all up to you. But yeah, we did have a look at the sweep of the high over here, a region range high, market structure shift, you know, lower low, lower high. That lower high came to trigger your entry. Stop loss above the highs. Actually, yeah, the highs are, but yeah, yeah. Stop loss is above the highs, 1:2. There you have it. So you see the wins are more than the losses. Sweep of the high also, market structure shift, market structure shift. And we did have a change instead of delivery also happening. So that was a bonus. 50% equilibrium, stop loss, 1:2. You see, win. So you can actually flip your account like this, right? So see also shift. I mean sweep of liquidity highs, master shift, lower low, price came 50% equilibrium, stop loss above the highs, 1:2. There you have it. There you have it, guys. So this was starting from February actually. So on this day we didn't have anything. The 4 hour period ended. So 1, 2, 3 win, 4 win, and then this ended up being a loss number 1. 5 win, loss number 2, no trade. 6 win, 7th win, No trade. 8th win. Loss number 2. No trade. No trade. No trade. The 9th win. No trade. But someone could have easily got trapped here. But I did explain I would have taken this because this was the one that actually ended up price breaking below, because price didn't break above it because of the range, right? Yeah. 10th win. 2 losses, 10 wins for the month. So 80% accurate. 10 wins, 2 losses for the whole month. You up. You definitely up. That's some serious upness. You up. So yeah, guys. Anyway, we didn't have price come back. Our 4-hour periodics expired. Um, yeah. So just a quick recap of the London session of the ICC. We're gonna be going back to the likes of Nasdaq. So I did speak about some possible entries here on the 15. As you can see, price came back to correct this level over here. So you can whether entry method, whatever you're gonna be using, 1:1, the side entry criteria, wherever the lower high will be corrected to, or you can just use price whenever it makes a lower low, lower high. You get what I'm saying? So as you can see, we have the 5 minute already there, pushing, above this. Once you probably the lower highs get taken out on the 5 minute, chances are price would make a lower low and lower high and then go to the downside again. So you can use that for an entry to take price to the downside on ICC, whatever you prefer. But overall, we're still very much bearish on Nasdaq due to the indication that we did have, not because of the war, due to the indication that we did have to the downside, price on that created lower, and then now we're on a continuation to the downside. And I did show, this being the trade, stop loss above the highs, and obviously liquid take price back to these lows or back to the next swing point, previous swing point we should have been over here. So that's where price is looking setting at the moment. Get what I'm saying? So we do have the US 30. The US data did say we did have price to wake out the lows over here. We're very much bullish eventually, but this higher low that ended up leading to this higher high above these previous highs over here, where we did have an indication being made by price to the upside. Price was supposed to come and correct and go to the upside. We had a war happening from Friday. Price started to drop from there, and now we broke below this level. So we're having a similar situation that we're having on Nasdaq. So now we have an indication to the downside. So we're looking to take price to the downside. But remember, price has room to correct between this higher low and this higher high. There's room to correct between this space before it can continue to go to the downside. But overall, that's where I see price. Price can still continue to go to the downside with the indication on the 4-hour. Down to the 1 hour, we can clearly see there was a gap that was left down, but then price can still go back, close the gap, and continue to go to the downside with everything that is happening at the moment. But now it will be more of a battle between the buyers and the sellers. So most importantly, you want to be where the market is heading. So far we did have I think we did have a candle close below this area on the 1 hour. So price might be looking to continue to go to the downside down to the 15. As you can see, this can still be at least if there's an indication the 15 minute. The lows have been taken out, so price can go and correct. If price doesn't break anything above from this level over here, I wouldn't say this one, but yeah, if price doesn't break from here, because we did have price obviously, with this lower highs over here, if price doesn't break anything from here, we can still expect price to go to the downside from these areas as we suspect. Get what I'm saying? So with that being said, yeah, we then have gold. So this will bring us to the end of today's session. We do have gold, and as you can see, price has been going up, and then I did speak about where I expect price it might go to correct to. Get what I'm saying? So